Starting. All attendees are in listen-only mode.
Hi, Ron here at AbleTrend. Welcome to the webinar. We'll take a look at the charts today. We always go over all the signals, the buys, the sells, where to put your stop loss. I always like to start off with a stock chart, and then we'll take a look at an intraday E-mini chart, and we'll see what the software says. I mean, it's always the same rules. And it doesn't matter what you trade with AbleTrend. A lot of people say, oh, does it only work for stocks or only work for futures or day trading? No, it's exactly the same. I mean, it doesn't matter one bit. Just as many people like to trade, longer term or short term. Stocks, futures, currencies, doesn't matter. It's whatever you like to trade. Obviously, you have to be in front of your computer all day long to be successful at day trading because nobody in the world knows when a big trend is going to start. We usually get one or two big trends a day, so the whole key is to take advantage of that. Because if you don't, then there's just going to be a bunch of small winners and small losers. And I can guarantee you, there's going to be some losing trades. There's no perfect system in the world, nor is this. But if you always keep the winners bigger, or if you always keep the same thing would be that if you always keep the losers smaller, and you stick with it and you have at it every day and you're disciplined and just follow our simple rules, you have to come ahead. It just, there's no way not to. The problem comes where you and I have emotion. There's where the big problem is. That's why trading's not for everybody, day trading especially, because it's just up, down, up, down, up, down every minute of the day. You have to kind of have nerves of steel, really, because you have to just trade the software, the signals. Because what you think, or certainly what I think, rarely happens. But the signals are, really, really profitable. So the point is, and so many people look at it, after the day is over or the week is over, they look at it on the weekend and go, wow, why wasn't I using it? I would have killed them. Because the problem is, the emotional part, and you can't be a winner. Nobody can, and none of us can if we trade on emotion or our feelings or what we think. If we trade on the algorithm, which is certainly a lot more accurate than you or I could ever be, and it has no emotion, then you can, we're going to do really, really well. And I'll compare it against anybody else's trading or program or indicators any day of the week. So let's jump in and take a look. And this is a Microsoft chart, a daily, weekly chart. I also like for swing trading, 130-minute daily. That's a good swing trading chart. But let's take a look at the little longer term. Obviously, back a few months ago, picked up the huge uptrend. And again, just look at the dots and the crosses. If the dots and the crosses are red, they'll be going down. It means you're in a downtrend. I mean, just look at the big picture. You don't want to ever get too close. I always like to zoom out when I look at a chart. I look way, you see more things. Sometimes you zoom in a little close and it just doesn't, you don't see everything you should be seeing. And then of course, the big downtrend 2 months ago when everything went down. And then right in here is where you want to be buying it. Not in here because you need to cross. And the rule is always the same. You have to have a blue cross, which comes in once a week. That's why it comes in every 5 days. And then the first time you get a blue price bar. So we're just looking for a blue cross and a blue price bar. That's it. Nothing else matters. Some people say, well, if the bar is green or if it, no. Nothing else matters. This is the only thing that counts. Anything else is no trade. So that kind of clears that up and gets right to the point, which is how I usually am. I don't like to ever mislead anybody or paint any unrealistic expectations or exaggerate, because I hate when that's done to me. So right over here is where you're going to buy on this day or that day or any one of these days right here around 174, and looking pretty good here at 180, and it kind of bounced right off of support here. Been a little choppy lately. I mean, I had a couple of down days in the market and was down again today, and then a huge comeback pretty much all day long. But it doesn't matter if this is a stock chart, if this is a day trading chart, a futures chart. It's always the exact same rules, and it's always the exact same accuracy with AbleTrend, no matter what you trade. Now, some trades, some markets are just very sideways and choppy, and it doesn't matter who you are. Nobody can win during that. The good part about AbleTrend is you'll get a lot of no trade zones when it's choppy or sideways. That's the key. You'll get a lot of no trade zones. Sid, it doesn't matter if the cross is above the X or down below or in left field. Yeah, it's meaningless. It's just telling you that the signal came in, you've got a blue bar, and you've a blue bar here. You had a blue cross a couple days before that. You're way above the red crosses, so you're way above resistance because the crosses and the dots are support and resistance. So no, doesn't matter, sir. And then, so far we're looking good. Let's jump in and take a look at intraday. Very choppy day today. These are the days I like to show everybody AbleTrend because it's a losing day. I love that. I mean, I don't love that it lost, but I want to make it clear and set expectations realistically, not like some people think it's, magic and you're going to win every trade and win every day. Well, that's fantasy world because that doesn't exist anywhere on earth. The key is if you have smaller losing trades, bigger winners, and trade with zero emotion, almost like you're just a robot, or the money is meaningless whether you win or lose, that's when you do bad. Because if you play with scared money, none of us can win. It's just not going to happen because we're always going to have our emotions in play and we're going to make mistakes. It's just human nature. So we'll take a look here, and the first trade was a triple confirmation sell signal. I took the 2-minute off. It just seemed like too many people were very confused. Feel free to keep it on, perfectly fine. But with just so many new people coming every day, we've gotten more and more popular, and we got more and more well-liked than ever before. And that's after doing this, giving out buy and sell signals every minute of the day for 20 years. We're pretty proud of that. I just took the 2-minute off. Keep it simple. I want to make it as simple as possible. Again, perfectly fine to keep it on, but I just want to make it more simple. Because it's not going to be a big difference anyhow. It's such a small difference that, you know what, it wasn't worth confusing thousands of people. So I just took it off. So right there, obviously, there's your first time you get the cross. Look for the crosses first. Look for the crosses first, meaning the 3-minute sell signal. Now I have a 1-minute sell signal. Now I have a trade at the open of the next bar. So look for the crosses first. That's the higher time frame. When you get the first red cross, you've got a red, and then you look down and you see a red price bar, and you're below the blue crosses if there are any there. If there's none there, it's nothing to think about. It's an easy signal. It's a clear-cut, obvious signal. If there is a blue cross there, because sometimes, it has 3 minutes to decide. Sometimes it flips because the market is moving and the algorithm's doing the calculations. Of course, once the 3 minutes close, the same way once the 1-minute price bar closes, it will never, ever change. That'd be fraud. It'd be cheating if it did after fact. I can tell anybody what to do when the day is over. Duh. I'd never have a lose trade in my life. That'd be ridiculously easy, but that's not reality. We're about real life trading here, not any fake stuff. So once the cross is there and the price goes under the blue cross, if there aren't any there, which they are well under it, we're going to go long, or we're going to go short at the open of the next bar. Because once this bar closes, once the next bar opens, the bar before it and every other bar before it for 100 years will never, ever change again. That's simple enough. Now, once we get 2 green bars, stock goes 1 point above the top of the red bar right there. As the dots go lower, we move your stop loss lower. But when we get 2 green bars in a row, if we're at least, we use 10 points, you can use anything you like, for NQ, 2 points for ES. Then what we're going to do is we're going to put our stop 1 point above or 2 points above the top of the green bar. If we get 2 green bars in a row, we would never, ever exit the trade on a red bar because the red bar is telling you it still has more room to run. The odds are still very much tilted. It's going to go lower. So we put the stop 2 points, I make that 2 points now, above the top of the green bar. And right there, a couple of minutes later, we're stopped out. Okay, that worked out nice. Picked up good money on that trade. We went short here at 05, and we got stopped here at about 92. Okay, picked up about 12 points on that first trade. When do I get back in? On a sweet spot or on a reversal triple confirmation trade. Trade zone, obviously, we would never buy with red crosses above. We would never go short if there was blue below. Next trade was a losing trade. Now, we've had nothing but red crosses all morning here, so we're not even thinking about buy signals. We're only going to go short. And this was a losing trade because 1 point above the top of the red bar, and the very next bar, we were stopped out. Okay. Now we're going to go long. Here, now the crosses become blue, so we're going to go long right there. Great. I'm going to go long right there, and this sweet spot, by the way, is not in play because it's like 25 points from the red dot. It's just not going to happen. I mean, you're just not going to chase it for a sweet spot. You want that sweet spot close to the red dots, because a sweet spot is not as strong a trade as the original triple confirmation trade. So now we're going to go long over here, actually right there, at the open of the next bar. There's your triple confirmation buy signal. We lost on that trade. Okay, be fair about it. Stop goes 1 point below. We were stopped out right there. Now, if you can put your stop a little further away, we would rather everybody put the stop underneath the blue dots because the dots give us protection in case it goes lower. However, most people can't handle that kind of risk. So we keep it a little simpler, and we just put it a point below the bottom of the blue bar. Stop at. Didn't catch that trade. No trade zone in here. We've got now the 3-minute signal goes on a short. We're going to buy it. We're going to short it over here. There's our red bar. Stop goes 1 point above. Stop out. Same thing happens over here. No, this is the dead zone. Even though it was a winning trade right here, that's the dead zone. Especially on a choppy morning, you can't. Dead zone is out of play, and it was a very choppy morning. So the dead zone between 12:30 and 1:30 Eastern, no trades. Just going on a choppy morning, just going to leave that alone. Now we're going to go short because the bar's gone red. Go red bar here, and we stopped out again 1 point above the top of the red bar. We were stopped out here. It wasn't fun, but we know that big move is coming eventually, and the average is 4 out of 5 days a week that we have winning days. And to be honest with you, Monday, Tuesday, and Wednesday were some of the 3 biggest days of the year. It was so accurate, and the profits were so big Monday, Tuesday, and Wednesday. Today, losing day. Triple confirmation trade right there. That was about a break even. Buy signal comes in over here, and I love that last hour of the day. Quite frankly, that's my favorite time of the day to trade. And there we finally had a real good trade to make up for some of those earlier stop outs. You've got your blue X's. You're above the red cross. That's the key. You're above the red cross in case it was flashing at that time. So we're definitely going to take that first blue bar that closes above the red cross. First triple confirmation bar that closes above the red cross. That's right there. And that one worked out very, very nice. We've got a 2 green bar. We could put a 2 green bar stop there. Never hit it. 2 green bar stop below that. Never hit it. 2 green bar stop there. Hit it. So we're out at 25. We're in at 85. That was a 40-point winner. Makes up for some of those earlier stop bets. You've got to stick with it, especially the final hour of the day. You never want to get out the final hour of the day. That's the best trade of the day, in my opinion, watching it every minute of the day for 16 years. And then we actually had another one right here about 15 minutes before the close. Blue bar, blue cross, nothing but blue crosses the last hour, so we know the uptrend is strong. 1 point below the bottom of the bar, and that one worked out pretty nicely too. Right into the 4 o'clock New York close, we picked up another 30 points going into the close. Actually, it was 40 points into the close. Actually, it was 50, but let's call it 40 into the close. So we had two 40-point winners into the close, more than making up for those earlier losses. And it was an ugly morning, but again, if you're emotionless and you're trading the signals, being that we didn't have that big winner yet, and we usually have two a day, almost always one. I can't guarantee it. There's going to be some days there'll be none. But I think in the past 2 months, maybe even the past 3 months, every single day there was that 30, 40-point winner, at least one, and some days two or even three. Yesterday it was over 150 points profit for the day. Today we got killed in the morning. Luckily there were some low trade zones that kept us out of even more trouble that others don't have because we have the no trade zones. But we killed them, we killed them in the afternoon, and that's what counts. The last couple of hours, which the last couple of hours have seemed to be the best trades of the day. First and last 2 hours, I always say are the best trades of the day. So hope that helped. You just have to be, kind of like a robot. That's the key. Drew's asking, kind of like you and Jesse did a few years ago, 30 minutes. Not sure what you're asking, Drew. Did it a few years ago with focus on the NQ. Well, there's nothing more than what I just showed you here, Drew. So we literally don't stop for at least 9 hours a day. There's nothing any different than I showed you or was on the chart at that exact time, because we don't take a trade until the bar closes. And if it closes and it's final, that's it. So, this is exactly what you would have seen at that time. There wouldn't be anything more that I could possibly offer to you. A lot of people have said, well, you could charge for this, and just I don't want to charge anybody for anything, because there's nothing. The webinars are free, and there's nothing more that I would show you at that time than I just showed you now if we were looking at it at the same time. So pretty cool stuff. 1 point below here, and you know what? I got to tell you, I'm even thinking of pushing that to 2 points below the first blue bar triple confirmation trade, because you know what? In this really high volatile market, only because the VIX is in the 30s. You know what? That's why I went to 2 points last week, the other day. 2 points under the green bar, the two green bars, 2 points under the green bar, 2 points, above the green bars when we're short. You know what? That extra point has really been helping. So we're going to make it 2 points under the first triple confirmation bar. Although this was 1 point and it still was okay. 2 points above the first, triple confirmation short trade. Just, what, that extra 1 point is not going to make that big of a difference, but yet it does. Many times it never hits it. It comes so close so many times. You're welcome, Rick. You're welcome, Thomas, Mike. Shall I go with when the size of the bars are longer than 15 points? Michael Z, if you have to get into those. I know it's hard, trade a micro a lot, but the VIX is 35. We're going to get longer bars. It's just the nature of the market right now. When the VIX is more normal, like 15, 20, yeah, then the bars get shorter. But when the VIX is 30, 40, like it's been, it was even 80 last month, the bar sizes are just naturally going to be longer. Nobody has control over that, but only the market can control that. And the higher the volatility, the longer the bars will be from top to bottom, because there's more volatility. They're going up and down longer. So yeah, That's just the nature of the market at the time. Isaiah, like the new chart setting, you're welcome. Yeah, Michael, the bar size is always going to be longer, especially the first and last hour of the day, or even because that's when that's when you get the most volume during the day. So you really have to just go with it. Okay, I think I got to everybody's question. Thanks for being here, everyone. I'm always glad to help anytime. Feel free to call or email. Have a great night and stay safe.